Happy Friday, Eric Bibel with the Bible team at Neil Home Loans. There's something about short weeks that never actually feel short. They always seem to feel long. And that's no different for mortgage rates and their reluctancy of wanting to come back to normal. As we start the day, the 30-year fixed is up from last week's 7.17 to start the day at 7.29. But I do believe that's starting to shift. We'll dive into why we're seeing that shift, and it's really around some important data that was received this week. So today, we want to jump into GDP, gross domestic product, the second look for quarter one, the all-important PCE, personal consumption expenditures, and do you even bridge? So let's dive into GDP. Yesterday, there's a number of scheduled releases before the final numbers are released. So quarter four, gross domestic product, output of our nation, really gauging what we produce as an economy, was 3.6%. Quarter one, indicatively, we saw absolutely a slowdown. The first read was at 1.6. Well, yesterday, that second look was at 1.3, which, given the propensity of government spending, the amount that is being pumped into the economy from the government, to see an annualized growth of 1.3% in quarter one is not ideal, which is indicative of really a weakening, suffering economy. And it's really on the back of what inflation has been doing, the Fed's aggressive stance on combating inflation with rates where they're at. The consumer, the American populace is starting to retreat. Now, yes, at face value, not ideal. However, for what we want to accomplish, lower mortgage rates, more activity, this could really be the starting point where the Fed starts to take notice and ultimately pivot on their stance from a monetary policy standpoint. Secondarily, this morning, PCE, personal consumption expenditures, all important gauge of what the consumer is spending. Really, when we hear this 2% target imposed by the Federal Reserve, this is what they're looking at. So we got two important numbers, the month over month reading as well as the year over year reading. The month over month number was expected to be at 0.3%. We got a marginal decline at 0.2, and the markets as of right now are responding positively. So undoubtedly that 7.29% for the 30-year fix, we're starting to see signs of that improving as we progress through the day and as traders start to really digest the meaning and the importance of today's information. Secondary component of that was around the annual number. Markets were expecting 2.8, which was the month before, so the month of March. This morning, 2.8 as well. So no surprises, no increases, which really, again, as I mentioned earlier, is being welcomed by the markets. And as the day progresses, barring no catastrophes, we do expect that mortgage pricing will continue to improve. And really, all eyes now turn on to unemployment, which will be received next week. And obviously, as that comes out, we'll share. So as it stands right now, yes, we're not at that 2% target, but we are absolutely inching closer. And here, as the members of the Fed have spoke over the last few weeks, last few months, we need to see a pattern of this. Yes, inflation is here. It's sticky. It's more resilient than previously anticipated, but we are seeing progress. Layering in now unemployment, if we start to see unemployment start to run away, go higher, coupled with improving inflation, those rate cuts are going to come sooner than we expect. And hey, we're all going to welcome them. And lastly, I want to discuss bridge loans. Yes, I've talked of these numerous times throughout the last few weeks, last few months, and we're seeing a massive need for this particular product in market. So again, I feel very compelled to continue to beat that drum. At Neo, we saw this becoming a necessity last year as inventory suppressed. Clients were feeling they were stuck in their home because they did not want to transition to a new home without selling the existing home first. Well, we have products for them. We have invested tremendous energy and resource into ensuring that our clients are served at the highest level, from cash buyer programs to pseudo bridge to guaranteed backup offers. If you're running into clients that share, I want to buy, but I have to sell before I buy, we want to speak with them. There are massive options available for those clients. And again, they're creating movement where movement wasn't there before. We would love the opportunity to help. With that said, let's close this down. Yes, it was a short week. We're heading into another great weekend, and we're going to run with the improvement in market into this weekend. As we know, as I mentioned earlier, unemployment's on deck for next Friday, which again, we'll bring to you as it occurs. As always, make it a great Friday and an even greater weekend. Thank you.